next step in learning how to record transactions is to convert our knowledge of increases and decreases in the accounts to debits and credits. To help us do that, we're going to use T accounts. A T account is named for its shape, so it looks like a T. There are 3 keys to using T accounts. The first key is that debits are on the left and credits are on the right. The second key is that each transaction must have an equal dollar amount in debits and in credits. This is the same as when you were making sure that your accounting equation balanced with each transaction. So if you debit an account for $500, you must credit another account or accounts for $500. The third key is that the accounts have a normal balance of debit or credit, one or the other. If we look at our T account, assets have a normal balance of a debit, liabilities have a normal balance of a credit, and owner's equity is also normally a credit. The normal balance means that is what you record when an account in that classification increases. So the rules are, if an asset increases, it is recorded as a debit. If it decreases, it is recorded as a credit. If a liability increases, it is recorded as a credit. If it decreases, it is recorded as a debit. If owner's equity increases, it is recorded as a credit. If it decreases, it is recorded as a debit. Since revenues increase owner's equity, they are recorded the same as owner's equity. Increases are a credit, decreases are a debit. It follows that expenses, since they reduce owner's equity, are recorded just the opposite of revenues. Increases are a debit, decreases are a credit. Let's record some transactions in T accounts to see how this works. We create a T account for each account we are using and record the account name at the top of the T. In the first transaction, the owner writes a check on their personal account for $10,000 and deposits it in the business checking account. That increases cash, so it's a debit in the cash T account, and it's also an increase in the owner's capital account, so it's a credit in the owner's capital T account. Notice that debits equal credits. Next, the business buys equipment for $2,000. making a down payment of $1,000 and putting the rest on credit. Equipment is debited for $2,000 and cash is credited for $1,000, but we still have another $1,000 to credit somewhere. Since we still owe the vendor $1,000, we have a credit to accounts payable. Accounts payable is a liability, so remember that an increase in a liability is a credit. We're increasing the amount we owe from $0 to $1,000, so a credit makes sense. Now the business pays off part of the debt on the purchase of the equipment, writing a check for $500. That's a credit to cash, since it decreases the amount of cash we have, and a debit to accounts payable, since paying part of the debt decreases the amount we owe. Next, the business provides $2,000 in services to a customer on credit. Since the customer did not pay us in cash, accounts receivable is increased by $2,000, which is a debit. Service revenue is also increased by $2,000. When a revenue account increases, it is a credit. In the last transaction, the business writes a check for $500 for rent for the month. This results in a $500 reduction in cash and a $500 increase in rent expense. So that is a debit to rent expense and a credit to cash. You can now total the T accounts by adding all the debits and then adding all the credits. To combine debit and credit totals to get one ending accounting balance, you subtract the smaller from the larger and record it on the larger side of the T account. For example, for cash, we have $10,000 in debits and $2,000 in credits. So you would subtract the $2,000 from the $10,000 to get $8,000 as the ending balance. Draw a line across the bottom of the T account and record the $8,000 on the debit side. If there is only one entry in a T account, you don't need to total it. So accounts payable is the only other one to total. $500 in debits and $1,000 in credits becomes a credit balance of $500. You can check your entries by adding all the debits up and comparing it to the total of the credits. They should balance.